In 2026, BlackRock controls $13.5 trillion in assets. That's larger than the GDP of every nation except the United States and China combined. Yet most Americans couldn't name the CEO. If the largest shareholder of every major corporation is a single entity, and that entity answers to no one who exactly is in control, this is the Gilded Archives, where history's ledgers reveal tomorrow's patterns. What I'm about to show you isn't conspiracy, it's consolidation. And the archives already know how this ends. In 1973, two bond traders named Larry Fink and his partners faced a problem. Bond trading was manual, expensive, and required armies of people to track. But computers were getting better, so they built something new, software that could manage bonds automatically. They called it Blackstone Financial Management. In 1988, Fink spun it out into a separate company. He named it BlackRock. The first clients were pension funds. The pitch was simple. Let us manage your money with computers. You get diversification. We get scale. By 1996, BlackRock had $10 billion under management. By 2008, it was $1 trillion. By 2024, it's $10.5 trillion. That's not growth, that's gravity. Here's why that matters. When you have $1 billion, you're wealthy. When you have $1 trillion, you're a nation state. When you have $10 trillion, you're not investing in the future. You're buying the present. You own pieces of every major corporation. And not as an activist investor trying to change things, as an index investor trying to own everything. That's the mechanism. That's what John D. Rockefeller did in 1870 with oil. Vertical integration, control every step. But Rockefeller controlled oil refineries. BlackRock controls the capital flows that decide which refineries exist at all. The pattern has 4 stages, and we're watching it unfold in real time. Stage 1 happened between 1988 and 2000. It's called the automation phase. Fink built software that could manage bonds cheaper than humans. Pension funds abandoned the old guard. Companies like Wells Fargo Trust and State Street fought back, but they were fighting the past. By 2000, passive index investing was still a fringe strategy. Active managers still ruled. But the foundation was laid. The computer always wins eventually. That's stage 1. Check. Stage 2 happened between 2000 and 2008. It's called the standardization phase. Index funds became normal, not fashionable, normal. Instead of hiring managers to pick stocks, pension funds bought index funds that tracked the S&P 500. Why? Because they were cheaper. Because they outperformed 80% of active managers. Because fees matter. BlackRock didn't invent this. Vanguard did. But BlackRock copied it perfectly. By 2008, when the financial crisis hit, BlackRock was the company everyone called to manage the wreckage. Fink had the software. He had the scale. He had the reputation. The government hired BlackRock to value toxic assets, to decide which banks lived and which died. In one moment, BlackRock went from investment company to gatekeeper. That's stage 2. Check. Stage 3 is called the consolidation phase. It runs from 2008 to 2020. After the crisis, people lost faith in active managers. They moved money to passive index funds. BlackRock, Vanguard, and State Street, the big 3, captured 90% of new index fund flows. Not because they were better, because they were there. Because they were cheap, because the game had changed. By 2020, these 3 companies collectively owned more than 80% of the S&P 500. Not majority stakes, minority stakes, in everything. Together, they're the largest shareholder in 88% of American corporations. Not the largest individual shareholders, the largest single investor, every single one. Apple, Microsoft, Google, Tesla, Walmart, Amazon, Johnson & Johnson. When you own small pieces of everything, you own the system. That's stage 3. Check. Stage 4 started in 2020 and hasn't ended. It's called the authority phase. This is where ownership becomes governance. BlackRock CEO Larry Fink doesn't run Apple. He doesn't need to. He owns 6% and votes it. But 6% is enough when the other shareholders are fragmented. When you can convince 10 to 15% of scattered shareholders to vote your way, you control the corporation. And Fink understood something crucial. The corporations he owned were facing pressure on environmental, social, and governance issues. ESG. So BlackRock became an ESG enforcer. If you wanted BlackRock's votes, and you did, because they controlled capital flows, you had to commit to ESG. Banks had to divest from fossil fuels. Energy companies had to decarbonize. Oil and gas firms had to change management. Not because shareholders voted them out, because the largest shareholder made it a condition of capital availability. By 2023, Fink was writing annual letters to CEOs, explaining what they would do. Not asking, explaining. This is the moment when investment becomes power. Stage 4. Check. The archives show this before. In 1900, Rockefeller controlled 90% of American oil refining. But he had to do it through acquisitions, through force, through buying individual refineries. He was visible. He was vulnerable. The government broke him up in 1911. But BlackRock controls 6% of every corporation and 100% of the voting mechanism. They're invisible. They can't be broken up. There's nothing to break. The mechanism is perfect because it's distributed. Rockefeller needed to own everything. Fink only needs to own a piece of everything and control the voting. That's the evolution. That's why it works now when it couldn't work then. Now here's where it gets personal. Every time you save for retirement through a 401k, you're probably buying an index fund. That index fund is managed by one of the big three. That fund owns pieces of every corporation. When you retire, your pension is invested in index funds. When insurance companies manage your policies, they invest in index funds. When college endowments build wealth, they use index funds. The mechanics are invisible but complete. You're not choosing which companies to support. The algorithm is, and the algorithm is owned by three companies, not three individuals, three entities. Vanguard is private. BlackRock is public but tightly controlled by Fink and his inner circle. State Street is owned by shareholders but functions as an administrator. You need gas, Exxon, Chevron, BP, all descended from Rockefeller's 1911 breakup. But they're also all majority owned by the big three. You're not choosing which branch of Rockefeller's tree to feed. You're feeding the whole tree. The whole tree owns itself through you. The consolidation is accelerating. Since 2020, the big three have been coordinating on climate policy, not through formal agreement, through synchronized behavior. Every major bank has divested from coal, not because shareholders demanded it, because BlackRock made it the price of remaining in their funds. Every energy company is investing in renewables, not because it's profitable yet, because BlackRock votes that way. This is governance without authority, power without accountability. It's the perfect version of what Rockefeller dreamed of but couldn't achieve. He wanted to control the industry. Fink controls the capital that decides which industries survive. One is a visible dictatorship. The other is invisible democracy. One is hated and broken up. The other is trusted and rewarded. Where are we in this pattern? We're at the moment right before the inflection point. The big three now control more capital than exists in government treasuries, more voting power than exists in any election, more information about future cash flows than exists in any intelligence agency. They know what companies will succeed before the market does. They know which sectors will collapse before the data shows it. They know which geopolitical risks matter before the headlines break. And they're using that information to position capital accordingly. Not to make money, they already have too much money. To control direction, to decide which futures are funded and which are starved. The pattern says what comes next is obvious. When you control more resources than the government, you stop needing to influence it. You become it. You become the entity that decides resource allocation. That's not banking, that's empire. Three paths forward exist. The first is acceptance. The index fund machinery delivers efficiency. Your retirement savings grow because the system is optimized. You benefit from that. The cost is autonomy. You don't choose where your money goes. The algorithm does. And the algorithm serves the three entities that own it. You get retirement security. They get civilization management. The second path is resistance. You could pull money from index funds and buy individual stocks. More expensive, less diversified, more work. You'd retain autonomy. But you'd sacrifice the returns that index funds deliver. That's the trade. More control, less money. For most people, that's not a trade that works. The third path is positioning. The pattern shows that production always survives. Every collapse we examined, the people who could produce something essential, food, water, electricity, medicine, retained power. Paper promises evaporated. Production didn't. The deeper protection is skill. The systems operator, the maintenance engineer, the farmer, the electrician, the person who makes things work. That survives everything. Because when the financial system resets, and it always does, the people who create value become invaluable. The people who understand capital flows become unemployable. Empires don't collapse from outside. They collapse from inside. And they collapse when the concentration becomes so extreme that it breaks the mechanism that holds it together. Standard Oil, the Dutch East India Company, the British Empire at its peak in 1900. Same pattern. Concentration so extreme it became invisible. Power so complete it became totalizing. And then the system couldn't adapt anymore. Couldn't distribute risk. Couldn't survive the shock that always comes. We've completed 3 stages of the BlackRock pattern. History says stage 4 ends in either total authority, Fink becomes the visible emperor and people revolt, or in fragmentation when the system breaks under its own weight. The archives don't predict which. They just show which has happened before. Both. Both always happen. The question is which one first. The pattern doesn't say. But it does say this. When one entity controls more capital than the government, one of two things happens. Either that entity becomes the government, or the government remembers it has an army. History suggests the second option comes second, and when it does, the investment that looked safe becomes the target. The Gilded Archives reveal the pattern. The pattern shows the inflection point. We're approaching it. Subscribe if you want to see which direction breaks first, because when empires reach this level of concentration, they don't decline gradually. They choose, suddenly and irreversibly.